Listen, I'm going to tell you something that most people don't want to hear, but I'm going to say it anyway because somebody has to. You don't need $100,000 to start building wealth. You don't need $50,000. You don't even need $10,000. You can start with $1,000, $1,000. And if you do what I'm about to tell you, if you follow the exact strategy I'm going to lay out in this video, that $1,000 can turn into $1 million portfolio. Not overnight, not in a year, but over time, with discipline, with patience, and with the power of compounding, it will happen. And I know that because I've seen it happen. I've lived it. I'm Kevin O'Leary. I started my first business with $10,000 that my mother gave me, $10,000. And I turned that into a company that sold for $3.8 billion. Not because I was lucky, not because I was born into money. Not because I had some secret Wall Street connection. I built it because I understood one fundamental principle that separates people who build wealth from people who stay broke their entire lives. Money makes money, and the money that money makes more money. That's compounding. It's the most powerful force in finance, and most people completely ignore it because they're too busy spending every dollar they earn on garbage they don't need. It's that simple, and it's that brutal. Now, before I break down exactly how to turn $1,000 into $1 million portfolio, I need you to do something for me. If you're serious about building real wealth, if you're tired of living paycheck to paycheck, if you're tired of watching other people get ahead while you're stuck in the same place, then hit that like button and subscribe to this channel right now. Smash it. This channel is about financial freedom. We're building a community of people who are done making excuses and ready to start making money. We deal in truth here, not fairy tales. So subscribe, become a member, join this community, because what I'm about to tell you, most people will never figure out on their own, and their financial advisors are too busy charging them fees to actually explain it. Let me get one thing straight. The biggest lie in personal finance is that you need to be rich to invest. I know, your friends told you the stock market is only for wealthy people. Your coworker told you that you need at least $20,000 or $30,000 to even get started. But I'm telling you the truth. That's complete nonsense. There has never been a better time in the history of the world to be a small investor. Zero commission trading, fractional shares. You can buy a piece of Apple or Microsoft for $5. $5. When I started investing, you had to pay $50, $60, even $100 in commissions every time you made a trade. You needed thousands of dollars just to open a brokerage account. Those barriers are gone now. They've been demolished. And if you're not taking advantage of that, you're making one of the biggest mistakes of your financial life. Let me explain something to you about how wealth actually works, because most people have it completely backwards. They think rich people got rich by making a lot of money. Wrong. Rich people got rich by keeping and investing the money they made. There are people who earn $500,000 a year and are broke. I know them. I've met them. They make a fortune and they spend every single penny on cars, houses, vacations, and designer clothes. And at the end of the year, they've got nothing. Zero. Meanwhile, there are school teachers and firefighters and factory workers who earn $50,000 or $60,000 a year and retire as millionaires. How? Because they saved consistently, invested wisely, and let compound interest do the heavy lifting for 40 years. That's the secret. There is no other secret. That's it. Here's what most people don't understand. When you invest money, you're not just putting it in a box and hoping it grows. You're buying ownership in real businesses that generate real profits. And those profits get reinvested, they compound, they grow year after year after year. And the longer you let that process work, the bigger the snowball gets. Albert Einstein supposedly called compound interest the eighth wonder of the world. Whether he actually said it or not doesn't matter. What matters is that it's true. Compound interest is the one mathematical force that can take an ordinary person with ordinary income and turn them into a millionaire. But it requires time, and time is the one thing you cannot buy back once it's gone. Let me give you the math, because numbers don't lie. People lie, banks lie, politicians lie. But math tells you the truth every single time. When you start with $1,000 and you add just $100 a week, which is about $14 a day, and you invest it in the stock market, earning an average return of about 10% per year, which is what the S&P 500 has averaged over the last 60 plus years. After 30 years, you'll have over $1 million. Let me repeat that. $100 a week, starting with just $1,000, becomes over $1 million in 30 years. That's not a fantasy. That's not some get-rich-quick scheme. That's just compound interest doing what it does when you give it enough time and enough consistency. And here's the part that really gets me excited. The growth isn't linear. It's exponential. In the first 10 years, you might have around $100,000. In the next 10 years, it jumps to maybe $300,000 or $400,000. And in the final 10 years, it explodes to over $1 million. The vast majority of the growth happens at the end. That's the magic of compounding. The longer you stay in the game, the more powerful it gets. But most people quit before the magic kicks in. They get frustrated because their portfolio isn't growing fast enough in the first few years, and they give up. They pull their money out. They go buy a car or take a vacation, and they destroy decades of potential growth for a few moments of instant gratification. That's the tragedy of personal finance in America. People can't wait long enough to win. I've been doing this for over 40 years. I've seen people who started with nothing build incredible wealth because they understood these principles. And I've seen people who inherited fortunes lose everything because they refused to learn them. The difference between these two groups isn't intelligence, it's discipline. It's the ability to delay gratification today so you can have freedom tomorrow. And that's exactly what I'm going to teach you right now. I'm going to walk you through the 5 steps to turning $1,000 into $1 million portfolio. 5 steps. That's all it takes. But I'm warning you right now, step 1 is going to hurt, because step 1 requires you to look in the mirror and be honest with yourself about where your money is actually going. Step number 1, stop bleeding money on things that don't matter. Now, before you roll your eyes and say, Kevin, I've heard this before, let me be very specific. I'm not talking about never enjoying your life. I'm not telling you to eat rice and beans for the next 30 years. What I'm telling you is that you need to find the leaks in your financial ship and plug them right now, today. Let me hit you with some numbers. The average American spends over $150 a month on subscription services. Netflix, Hulu, Spotify, gym memberships they never use, apps they forgot they signed up for. That's $1,800 a year, gone, vanished. For what? For entertainment you could get for free at the library? Let me tell you what $1,800 a year looks like when you invest it instead. If you take that $1,800 a year and invest it at 10% average annual return for 30 years, it turns into over $300,000. $300,000. That's the true cost of your subscriptions. That's what you're giving up every single year you keep paying for stuff you barely use. But here's what really kills me. It's not just subscriptions. It's the $5 coffees. It's the $40 lunches. It's the impulse purchases on Amazon at 2 in the morning. I always say a $28 lunch today can cost you $800,000 over 30 years when you factor in compound growth. Think about that for a second. That lunch isn't $28, it's $800,000. That's the real price. But nobody thinks about it that way because nobody teaches you to think about it that way. Now I know what you're thinking. Kevin, I work hard. I deserve to treat myself. And here's my answer. Of course you do. But treating yourself doesn't mean destroying your future. Smart people treat themselves with investments that grow, not expenses that vanish. My mother taught me this when I was a kid. She said, never spend the principal, only spend the interest. She built a secret portfolio of dividend-paying stocks over 50 years. Nobody knew about it, not even her husbands. And when she passed away, I found it. Dividend stocks and corporate bonds. 50 years of compounding. It was incredible. That's the power of discipline. That's what patience looks like when it matures. Let me tell you something about wealthy people. They don't deprive themselves. They redirect their spending. Poor people spend money to feel rich today. Rich people invest money to actually be rich tomorrow. That's the difference. And that difference, over 30 or 40 years, is the difference between retiring with $1 million and retiring with nothing. And that brings me to step number 2. Start investing immediately, even if it's small. I don't care if you've only got $1,000. I don't care if you can only put aside $50 a week or even $25 a week. Start now. Today, not next month, not next year, not when you feel ready, now. Because every day you wait is a day of compounding that you lose forever. You can never get it back. Time is the most valuable asset in investing, and you're wasting it. Here's why starting small works. Let's say you're 25 years old and you invest just $25 a week into a broad market index fund. That's about $3.50 a day, less than a cup of coffee. At an average annual return of 10% by the time you're 65, that $25 a week has turned into over $680,000. But if you wait until you're 35 to start, 10 years later, doing the exact same thing, you end up with about $250,000. You lost over $400,000 by waiting 10 years. $400,000. Gone. Not because you did anything wrong, just because you waited. That's the cost of procrastination. That's the tax you pay for saying, I'll start next year. But here's what really scares me. Most people don't even start by 35. They wait until they're 45 or 50, and by then, the math is working against them. They'd have to save 3 or 4 times as much every month just to end up in the same place. And most of them can't afford to do that because they spent their 20s and 30s buying things they didn't need with money they didn't have. Now, I know what some people are thinking. Kevin, the market is volatile. What if I invest my $1,000 and it crashes? And here's what I tell everyone who asks me that question. The stock market has gone up on average about 10% per year for the last 60 plus years. Has it crashed along the way? Absolutely. It crashed in 2000. It crashed in 2008. It crashed in 2020. But every single time it came back, and it came back higher than before. If you invested $1,000 in the S&P 500 in 1990 and just left it alone, reinvesting dividends, you'd have over $20,000 today. Through every crash, every recession, every financial crisis, the market rewards patience and punishes panic. That's the cold, hard truth. Warren Buffett, the greatest investor of all time, has said it perfectly. The stock market is a device for transferring money from the impatient to the patient. Let that sink in. The impatient sell when the market drops. The patient buy more. And over time, the patient get rich while the impatient stay broke. Which one are you going to be? And that brings me to step number 3. Invest in what you understand and keep it simple. This is where most people completely mess things up. They hear about some exotic investment, some cryptocurrency nobody's ever heard of, some penny stock that their buddy told them is about to explode, some complicated option strategy they saw on social media, and they throw their money at it without understanding the first thing about how it works. That's not investing. That's gambling. And gambling is how you lose everything. Here's what I do and what I tell every investor who asks me. Keep it simple. When I'm investing for the long term, I focus on 3 things. Quality companies with strong balance sheets, diversification across different sectors, and dividend income. That's it. Those 3 principles have guided my investing for decades, and they've made me very wealthy. I created an entire ETF around these principles because I believe in them so strongly. You don't need to pick individual stocks if you don't want to. You can buy a low-cost S&P 500 index fund and own a piece of the 500 biggest companies in America for almost 0 fees. Or you can buy a dividend-focused ETF that gives you exposure to the highest quality dividend-paying stocks in the market. The point is, you don't need to be a genius. You don't need to read financial reports all day. You just need to buy quality, diversify, and hold. But here's what really bothers me about the investing world today. Social media has turned investing into entertainment. People are day trading on their phones during lunch breaks. They're buying stocks based on memes. They're putting their life savings into volatile assets because some influencer with a Lamborghini told them it was a sure thing, and they're getting destroyed. Let me be very clear about something. 90% of day traders lose money. 90%. That's not my opinion. That's what the research shows. The people getting rich from day trading are the ones selling you courses about day trading. They're making money from you, not from the market. Don't fall for it. Let me tell you something about smart investors. They're boring. They buy the same quality companies every month. They reinvest their dividends. They don't check their portfolio every 5 minutes. They don't panic when the market drops. They just keep putting money in, month after month, year after year, and they let compounding do its job. That's not exciting. Nobody's going to make a movie about it, but that's how millionaires are made every single day. Broke people try to get rich quick with speculative bets. Wealthy people get rich slowly with disciplined investing. One group ends up with stories to tell at parties. The other group ends up with $1 million portfolio. Which outcome sounds better to you? And that brings me to step number 4, reinvest everything. This is the step that separates good investors from great investors. When your investments pay you dividends, don't spend them. Reinvest them. When you get a raise at work, don't upgrade your lifestyle. Invest the difference. When you get a tax refund, don't blow it on a vacation. Put it into your portfolio. Every single dollar that goes back into your investments accelerates the compounding process. It's like adding fuel to a fire. Let me give you an example that will blow your mind. Let's say you invest $10,000 in a stock that pays a 3% dividend and grows at 7% per year. If you spend the dividends after 30 years, your investment is worth about $76,000. Not bad. But if you reinvest those dividends, the same investment is worth over $170,000, more than double. And you didn't do anything differently. You just checked a box that said reinvest dividends. That one simple decision more than doubled your money. That's the power of reinvestment. That's the power of letting your money's money make more money. My mother understood this better than most professional fund managers. She never spent a single dividend, not one. She reinvested every penny for 50 years. And the result was a portfolio that shocked everyone when they found out about it. She wasn't a Wall Street trader. She was a regular person who understood one simple truth. If you let compounding work without interrupting it, it will change your life. Now, I know what some people are saying. Kevin, I need that dividend income to pay my bills. And I understand that. If you're retired and you need income, fine, take the dividends. But if you're in your 20s, 30s, or even 40s, and you're spending your dividends instead of reinvesting them, you're making a massive mistake. You're pulling the bricks out of the foundation of your future wealth. Every dividend you spend today is worth 10 or 20 times that amount in the future. Think about that before you cash out your next dividend check. And that brings me to step number 5, the final step, and this might be the most important one of all. Stay the course. Don't quit. There will be times when the market drops and your portfolio loses value. There will be times when you're tempted to sell everything and put it under your mattress. There will be times when everyone around you is panicking and telling you to get out. Those are the moments that define whether you'll end up wealthy or broke. Here's what I've learned in over 40 years of investing. The people who build million-dollar portfolios are not the smartest people in the room. They're the most consistent. They invest when the market is up. They invest when the market is down. They invest when they're scared. They invest when they're confident. They just keep investing. Rain or shine, boom or bust, they never stop because they understand that you can't time the market. Nobody can. Not me, not Warren Buffett, not anyone. The entire year's return can come in just a handful of days. And if you're sitting on the sidelines during those days because you got scared and sold, you miss everything. You miss the whole point of being an investor. I've seen this happen so many times it makes me sick. Someone invests for 5 years, the market has a bad month, they panic and sell everything, they lock in their losses, and then the market recovers, goes to new highs, and they're sitting there kicking themselves. Don't be that person. The market has survived world wars. It's survived pandemics. It's survived financial crises that made people think the whole system was going to collapse. And every single time, it came back stronger. If you stay invested through the storms, you get rewarded on the other side. That's not hope. That's history. Let me tell you a story. When I was building my first company, I had moments where everything felt like it was falling apart. Revenue was down. The market was against us. People told me to quit, to sell, to walk away. But I didn't. I stayed disciplined. I kept reinvesting in the business. I kept showing up every single day. And eventually the market turned around and I sold that company for $3.8 billion. The lesson isn't that I'm special. The lesson is that quitting is the most expensive decision you'll ever make. Whether it's in business or in investing, the people who stay in the game long enough are the ones who win. The people who quit never get the reward that was waiting for them just around the corner. But here's what separates the truly wealthy from everyone else. It's not just staying invested, it's increasing your contributions over time. When you get a raise, invest more. When you pay off a debt, take that payment and redirect it into your investments. When you hit a financial milestone, raise your automatic contributions. The people who end up with million-dollar portfolios didn't just invest the same amount for 30 years. They started small and kept increasing. They started with $25 a week and eventually got to $100, then $200, then $500. The more you feed the compounding machine, the faster it grows. That's how you go from hoping to retire comfortably to knowing you will. So let me bring this all together for you. Step 1, stop bleeding money on things that don't matter. Plug the leaks in your financial ship. Step 2, start investing immediately, even if it's small. Time is your greatest asset, and every day you wait costs you money. Step 3, invest in what you understand and keep it simple. Buy quality, diversify, and ignore the noise. Step 4, reinvest everything. Dividends, bonuses, raises, tax refunds, every dollar goes back into the machine. Step 5, stay the course, don't panic, don't quit, don't try to time the market, just keep investing month after month, year after year, no matter what. Now you're probably asking, Kevin, that all sounds great, but where exactly should I put my $1,000? And that's the right question. So let me give you the exact framework I'd use if I were starting from scratch today with $1,000 in my pocket and nothing else. First, open a brokerage account with 0 commissions. There are plenty of them out there now. There's no excuse not to. It takes 10 minutes. Second, take that $1,000 and put it into a low-cost S&P 500 index fund or a quality dividend ETF. Don't overthink it. You're buying a piece of the 500 best companies in America for practically no fees. Third, set up an automatic weekly transfer from your bank account to your investment account. Even if it's just $25 or $50 a week, make it automatic so you never have to think about it. You can't spend money you never see. Fourth, turn on dividend reinvestment. 1 click. That's all it takes to double the power of your portfolio over time. And fifth, delete the app from your phone. I'm serious. Stop checking your portfolio every day. The more you look at it, the more tempted you'll be to tinker with it, to sell when it drops, to chase something shiny. Set it, automate it, and forget about it. Check it once a quarter if you have to, but stop watching it like it's a football game. Here's what I do personally. I invest in quality dividend-paying companies. I look for strong balance sheets, consistent cash flow, and a history of returning money to shareholders. I diversify across sectors, and I never, ever touch the principal. That's the same strategy my mother used for 50 years, and it worked brilliantly for her. It's worked brilliantly for me, and it will work for you if you have the discipline to stick with it. These 5 steps are the difference between retiring broke and retiring with $1 million. It's not about being born rich. It's not about having a high-paying job. It's not about getting lucky in the market. It's about discipline. It's about consistency. It's about understanding how money actually works and using that knowledge to your advantage. I've seen people start with less than $1,000 and build portfolios worth millions because they followed these principles. And I've seen people earn millions of dollars in their careers and end up with nothing because they refused to learn them. The choice is yours. You can keep spending every dollar you earn and hoping that somehow, someday, things will get better. Or you can start today, start with whatever you have, even if it's just $1,000, and let compound interest turn it into something extraordinary. It's not complicated, it's just uncomfortable. And most people choose comfort over wealth every single time. Don't be most people. Now, if this video opened your eyes, if it changed the way you think about your money and your future, I need you to take action right now. Smash that like button. Tell the algorithm that this content matters, that people deserve to know the truth about building wealth instead of being sold lies about getting rich quick. Leave a comment below and tell me where you are in your investing journey. Are you just starting with your first $1,000? Are you already investing and trying to level up? Have you hit a milestone you're proud of? Be honest. We're all learning here, and I want to hear from every one of you. And if you haven't subscribed yet, what are you waiting for? Hit that subscribe button right now. Become a member of this channel. When you join this community, you're investing in yourself, you're investing in your financial education, and you're surrounding yourself with people who are serious about building real wealth. We're going to keep bringing you the truth, the strategies, and the no-nonsense advice that actually works. No fluff, no gimmicks, just the cold, hard math of how money really grows. Compound interest doesn't care about your feelings. It doesn't care about your excuses. It doesn't care if you think you're too young or too old or too broke to start. It only cares about two things: how much you put in and how long you leave it alone. So start putting money in and leave it alone. Let the math work for you instead of against you. That's how you build $1 million portfolio. That's how you go from $1,000 to financial freedom. That's how ordinary people build extraordinary wealth. Now get out there and make it happen.